Today is Monday, November the 28th. This is the last trading week of November, and we are traditionally slipping into a low volume area that is also normally predicated by higher price. Now, that being said, we have to think about how we might think about that in this particular space. We know that in general, low volume tends to accompany higher price action. And that's because people are usually a little bit more timid about getting in, but much more aggressive about getting out. So higher volumes typically will come on these lower dips. Now, that isn't always the case. There's nothing that's an always in the market. Really, I can't think of a single one. So that's kind of bad, right? Over consistency measures, though, often we find ourselves in a space where, as we are looking towards holiday trading, we would expect that pullbacks would be a bit shallow and that um, movement upward would be what we would most likely see at the shallow pullback. I believe that we are on a little bit of a congested space. We do have the new market timing is out, and definitively there is some action that we need to pursue there, and I'll be sending that email out to those of us that are part of that membership, because there's some things that I really want to talk to you about sitting in there that could be quite helpful. All right, so as we take a look at the day today, if we use something traditional like um, a trend line, perhaps, we can see that in general, we are still holding the breakout space. It has not shifted, and we are well above it. If we had a bi-monthly or a quarterly candlestick, this would be completely bearish engulfing. Came down into the space. The much lower level shifts are way below here. Notice the slope of the 10 as it begins to flatten and change shape, as opposed to the 30, which is still quite linear and upward moving. So it's telling us that the new motion in the near term is much less aggressive than the motion in the farther term. If we are collecting more candlesticks, our slope is still upward based on the past. And because these are not exponentials, but regular simple moving averages, we really have an even display of what's going on. What are we doing? Breaking out of the space. The ES is holding well above target levels. My thought is that notebook's still in my travel bag. My thought is that we actually have 2191 as the support zone to watch. I don't really think we're going to get all the way down there, but important to just say it in the event that we do end up drifting backwards. But 2191 to 2194 going to be baseline support. We know 2197 to 2199 also support regions. And then, well below there is that 2160, 2158. So we're going to keep our eyes on those areas as support. As resistance, we're looking at a variety of things. One of the things I noticed, and it's been a while since I've been back to the homestead, but speaking with folks in Las Vegas at the trip that I just took with traders, I did notice that people had a tendency to use the Fibonacci retracements very improperly. Now, we might want to look at it, and it might hold in some relative measure, but over a consistency space, not a good way to use these Fibonacci's. We must use them from waves that go from low to high or from high to low, a complete wave event. And we don't know that wave has occurred until it begins a bounce, or you've measured it from a prior wave. And I know I don't talk about it a lot, but I do use it behind the scenes, from a prior wave that comes in to a pre-market, to a prior target. This is the 113 area, which is like the midpoint region here between these. And so the 114, And so that in itself might give us the end of an old curve that gives us the beginning of a new one. But for those of us that have been around a long time, we know how to draw these Fibonacci's. For those of us that are a bit newer, you must have a complete wave. Now, that can be on any cycle you wish, but it must be on that wave. All right, so what are we seeing today? I see us essentially stuck in the mud, right? We've got 2207. 50, I believe, is shoring up as a resistance area, and I still like the 2203 region as general support. Now, could we break that level and fade? Yes, of course, but the first thing that we're going to do on that fade is bounce. Why? Because all our moving averages are up, because our momentum is in positive trending territory. Doesn't mean that the chart will not rotate over, but we are prepared to see bounce action just like this occur if we fade into these lower spaces here. Buyers have come into the mix every time. What we are building pretty well is lower highs. The bottom is very jagged, but these lower highs are telling us that we should drift into the opening tick. Where's my opening tick? All right, let's check these studies. Excuse me for a moment. Daily open. Isn't that odd? Oh, it's the same as the weekly open. My goodness, she is a 2-watt bulb this morning. Yes, here we are. Weekly and the daily are the same because it's Monday. Okay, so what we're doing is we came in, tested the open, faded from it almost immediately. We had a gap down, so we have no gap fill event that's happened yet. If the gap fill comes under this environment, it's very likely to fade as soon as it does that. But if it gives us the higher low, we've got to look at the expansion to the north. So this is what we've got. We've got this opening space. We're looking at this general formation, and what we've done after a retest is test a lower low, and now we're here stuck in the mud in this squeeze. If we come back and hold this region, it is likely to continue to press forward because the environment is generally bullish. And that really is what we are looking at, a generally bullish environment. So it doesn't matter if you're seeing your technical indicators down or your technical indicators up or this or congestion or whatever, the overall environment is bullish. And so we're going to watch these fades catch a drift. Now, when they come down into the space, you can think about going long. But if you're sitting here with flat moving averages and flat to mixed technical indicators, you know you are sitting in a very messy zone that's going to give you about a 50-50 shot in either direction. Now, some of us might like the coin toss. I'm not one of them. If you're looking for the 15-minute chart, you can see that it's very nicely holding this level. If it fades, retests, and gets underneath these moving averages, we're going to drift back down. But here's why I like that 2203. It's holding relatively well in that space. If not, it goes down to 2201, 2199.50, and so on. All right, so going to watch for that. Upside, really don't think that we're going to get past that 2212. But if we fill the gap and don't immediately fade, you're going to watch for that higher low for the chart to generally continue. All right, so let's take a look at the NQ. All right. The NQ is in a state of underperformance. What does that mean? It's not doing what the ES is doing, right? It is not doing what the ES is doing. And so what we are looking at essentially is a chart that is not cresting higher, flattening on the moving averages, and really, see how wide these are? We're going to look for resistance up there at 48.70 to 48.80. That's fairly likely. And support anywhere from 48.50 all the way down to 48.30, 48.35. Right? So I'm going to say 48.30 because that's this measure here, but we can look here at these wicks and see that they're pretty aggressive once it starts getting above that 48.37 area. If you are looking for great big movement, not sure it's going to happen today. It's already filled the gap. It did do it intraday, meaning pre-market in the Globex edition, but it did fill it. And so now we have that question mark of, well, does it have any oomph to get up over the edge? It's doing essentially the same thing, trying to hold above the open, but not, and then still essentially giving us lower lows in terms of the body style. My supposition is that we hold within a 10 to 15 point range today. It just doesn't look like it's going to have more on that. So I'm saying 48.54 to 48.67, 48.68, probably all we're going to get right now. See it slipping into the neutral zone. Look at how terribly these charts are formed, right? How do we look for good positions that involve trend and motion? We look for similar formations that show between the trend and between momentum. Well, they are similar, sideways. And so that means that up on the edges, we're going to see sellers and buyers. Down on the edge here, right? We'll see buyers and sellers floating through these edges, and the weight of motion is going to be difficult. So what are the key things to understand when you are looking at charts like this? One, the tipping point is right here at this 48.64 level. It should bounce and then retest if it's going to hold it. But it's definitely a tipping point. So if it goes up over this edge, more buyers are going to get involved. If it loses Anywhere that tipping point is a little messy here, but my guess is that it's 48.54. Now, I don't normally use the word guess, but I'm going to say I guess because it could be a little lower. I don't think it's any higher. That's all I can say about that, right? I don't think it's any higher than that 48.54, though, somebody could make an argument for it being 48.56. If I'm under my moving averages and I have a drift down in the oscillators, I know that is going to mean I have these lower levels on the horizon, but it still should bounce. Notice upward sloping 30, it lost it. What's the first thing it tried to do? Recapture it. Now it's losing it again. So that's got a bit of negative drift, but overall it's only negative into support. All right, I want to look at gold. Look at how lovely this pullback into our level was. And then the bounce zone event didn't quite come in to that zone. Let's put the newest drawings on because I think this is the oldest drawing set. Nope, it is. It's the newest drawing set. And so this level here, back in this, what did it come 2 days before Thanksgiving? Or something like that. We looked at that zone as the bounce point. Remember what I said. Listen, everything is really negative, really negative. So it's likely to bounce and then fade, but now you want to look for higher lows. Now, if the dollar strengthens, and it's been quite strong lately, but if the dollar strengthens, particularly after our December FOMC meeting, we are going to see another drift down, but the chart is getting very close to these key levels. I think they are ultimately going to hold to on the bounce. Notice this. Slow SMI way down here, fast SMI way up here. They're going to join together in the neutral zone. So we may end up having a couple of months that look like this, but inevitably we should be able to hold from here. Let's take a look at oil. People saying, oh, look at that. I got to tell you, you want to talk about a dangerous game right here. Oil is really teetering back and forth from news that's being, it's spread everywhere, is it not? It's permeated all over. Yes, OPEC needs a deal. They got to get it done or else oil's going to be in trouble, blah, 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 blah. Here's the thing. Oil is an extremely emotional product. It moves very whimsically many times. And so for us as traders, what we really need to pay attention to is what are our key areas of support and resistance? And that ultimately we need to have a look at the monthly and the weekly charts to give us the notion of whether we are in a zone, ding, ding, yes, or we're actually headed lower or higher. Now, I don't believe that we are in some kind of catastrophic move downward, but we could. Here's the thing. Nothing's telling us that that is going to happen. Irrespective of whether a deal comes or it doesn't, with the law of supply and demand here, we should see lower prices. The OPEC deal ultimately, it's not going to. People are focusing on this deal, but it's got very little to do with the actual supply and demand events that are going on right now. They're even if they froze levels right here, Everybody's still pumping out way more than we need. Way more than we need. So that being said, we just follow along with the news, realize that this came in almost to the penny of a 61.8 retracement event. It did double bottom, triple bottom here, and now bounced mightily up into this level. What should we see, folks? Well, can we see that this is old support that failed? This is the daily 50. This is the weekly 10. And we fell right through it. So these areas right here, 47.40, 47.38, clearly they stand as resistance zones for us in the chart, right? They really, really do. If we take a look at the weekly open from last week and the monthly open here, they're likely to come back here into this base. There's a ton. Look at all the selling here. They bought and bought and bought, and then boom, sold, big candlesticks downward. So guess what's up here? Ton of sellers. So as we see this fib, it's a 70.7, it came right into this edge and lost the region. What do we need to see? Higher lows if the chart is going to hold. But look at where it bounced from. It bounced from here, and then it bounced to here, so it's got lift. But it does not have the juice to keep running without a fade into the opening or congestion right around here. So that is my thought. The levels to watch on a breakout event for the CL, we're going to be looking for a move up over 47.40, right? A retest of that level or a hold over that zone. My thought is that it bounces, goes into 47.64, fades, and then holds this area again if it actually is going to uh, lift off of the region. My thought is that there are way too many sellers here. We can see it from the hourly formation of the fade off of this. This is a downward sloping 50, a downward sloping 30, and we did not do very much to test the region. So if we're approaching the 50 from underneath, doesn't matter if we spike, it is going to fade, and it should fade into lower highs. There are a bunch of traders sitting at 47.11. If we get back up over that level, it means they're starting to battle. And so that's really what we want to stare at. Down here in the congestion zone, 46.94, all the way down to 46.49. All right, so we're going to be looking for the breakout levels above 47.40. We know that 47.11, there's some buyers sitting right there. And of course, if people are trading the 4-hour and we come up, it's an upward sloping moving average, and we failed it and did not retest it until here, you know these buyers are trying to hold this region up. That's why they're fighting at this area. That's why it's congested, because it's giving us one direction on the 4-hour and another direction on the 1-hour, right? So when it's like that, folks, it is very, very messy. Your question might be, well, I want to trade oil. Which way should I go? You should go to the fridge and look for a snack. Is what I'm saying. There's no place to get a good trade in here. It's all very ugly unless you're looking at super tight moving averages, and then still you're not really sure what it is that's holding here. We can see these guys at 47.11 trying to pick up the heat. And so it is going to be a messy patch. Slope of trend down, slope of momentum up. It's going to give us a fade, but if it holds the higher low, these moving averages are going to reverse. All right. What's going to look pretty bad? Well, this chart won't look really bad until it slips down below 46.45. Right? So it's caught in just a very, very messy patch, and a lot of people are looking at the hope of moving upside. Okay, so here's my thought with Apple. I think Apple is presenting a topping formation. You'll notice from the silver and gold membership, I said, hey, listen, this thing is early last week. I said, listen, this thing's going to go from 112 to 115 more than likely. It came into 112.40 or so, and now here's the double top. There's technical momentum. It's drifting, so the chart should fade. Now, it's sideways, so people are going to try and buy it at the support zone, 111.30, and they're going to try and bounce it up into the space. I'm pretty sure the failed bounce action is what we're after here. There seems to be a lot of momentum that's dampening, and there are a lot of people that are super enthusiastic about Apple moving into the next space. But folks, I got to tell you, you got opposing tails here on the monthly. We're coming to the end of the road. Look at how it touched that 20 on the month. But we knew that 104 area was a long. We really did. We knew it was the end of a short for sure. And so bouncing off of that area, it really has made quite a beautiful long. That is essentially what we'll be looking here for, is a topping formation that can send us rolling over. Technology normally does well for the Christmas season, but that doesn't always apply for everything. What you have to realize is if we've got a slope and trend that's doing something, this to me looks like a bear flag. And this line here is going to give us a breakdown event from an option space. Options might be a little bit inexpensive, perhaps, at this juncture. But see, this is a trend line. People are going to try and bounce off of it. Why? 1, 2, 3. It's going to be natural. Look at the slope. Way down here, what's the bounce tell us? It's going to fade, right? So watch for the bounce event and then anticipate fade action coming up. Maybe 117.60 to 118.40. Let's take a look at Facebook. Haven't had a chance to look at a lot of these. Facebook recovering a bit, but starting to look a little messy. You know, my thought was, hey, listen, if we can get this thing down at the 120 area, it's got a tremendous amount of buying opportunity at that space, this 118 to 120. So here was, where was 118? Here's 118. And it did bounce hard. People moving up really, really hard. My thought is we might retest the level, right? And again, if we take a look at a big picture event, kind of looks a little bit like a bear flag. The problem is, you know, it's a bit messy. And so we can see it coming down into these areas and potentially holding the level pretty well. Yeah, I don't think I want to talk about anything else. Let's just get to the main charts. We'll see what gives here in the morning report. We'll watch the fade. And that is it for that.